Morning trader, Sasha here, coming to you live from Dublin, Ireland. Let's get started. Quick disclaimer that this is just how I see the markets. This is not a recommendation to buy, sell, or hold any security. Hello traders, Sasha here, and I'm here with an exciting new video called the Breakouts. Okay, today we're going to be covering breakouts. Today is Saturday, March 26th. It's 3:20 in the afternoon. We're going to start with the basics from the previous week. And the previous week I was explaining how to find these support and resistance areas. And in this video I will be calling them key levels. The key levels are the areas that I call a bullseye, the areas where we want to place the trades. This is where we want to invest. And if you understand that kind of a principle, you will understand a lot, like 90% of all the trading tricks that you need to know. Okay, so let's get started. Today I already prepared quite a few examples for you, so we're going to go over all of them, and you will understand and see that this kind of stuff is happening always on any chart, on any market that you can see the chart on. Okay, many of you see the charts, let's say on television or in newspapers, or when you open your Wealthsimple account, you will see something like this. Okay, I will show you this. Okay, so this is what you see. So when you look at a picture like this, you pretty much don't see anything. You don't know exactly what's going on in the chart. You don't know exactly anything at all. Like, this is just a graph that shows you, I don't know, just what the market is doing, I guess. As a trader or as an investor, I never look at that kind of stuff. But anyways, this is the kind of picture you will see. What I would take out of this picture is basically these peaks and valleys. Okay, so we're going to look at them. You see these peaks, right? And these valleys, peaks and valleys, peaks. These would be the areas basically where you would kind of place the trade. However, how would you actually know that that's actually a very important area? Like, how would you know? Like, and how would you even find a real support and resistance on that on that chart? So in order to do that, we really need to go switch back to candles, and the candles tells us stories. Stories, like, if you know how to read a book, I know how to read the charts, and this is how we're going to start today's lesson. Okay, and today, once again, we're talking about breakouts. Okay, so I'm going to start with the one familiar company that most of you are familiar or wear their products. So this is Apple Incorporated. We are looking at the 1 week chart, and in order to understand how breakouts work, we have to find these support and resistance areas. Now on this chart, okay, I already plotted these red lines. Okay, so you can see that I marked the peaks of these very important levels or key levels. Okay, you can see where the market stopped quite a few times before in the past. Okay, so once we find these areas, right, once we mark that, like we have marked this 138.23 area, very important, we can see that the market stopped here. This was the highest peak after this run over here, or this rally. We call it the rally in trading. Okay, market created this peak and then pulled back. Okay, so this is a pullback. All right, and then we created this valley, right? So this is the swing point for us. I was talking about the swing points last time, so if you're not sure what it was, go back to the lesson before and you'll understand the swing levels. All right, so we're looking at this swing here. Anything that happens in between these two levels, here and here, is no man's land. Basically, we are waiting for something to happen, and the goal of the market is always to break these levels. Every single trader, every single investor, in every single institution, they're investing banks, they're all looking to break these levels. Okay, so once we were in between these 2 points, okay, the market started rising. As you can see, this candle right here, okay, I'm gonna make a little mark here. It created this kind of a high, okay, which touched this level here, and you can see we can only see the wick right there. So the market rejected that level and the market fell. Okay. Then we came to that point once again with this green candle here. Okay. We broke to the other side, but in the next session, so this was unsuccessful breakout out of this area, 138.23. We have this huge red candle that basically closed back underneath, so closed back between these two lines that we are looking at. Okay, so the price is now closed right here. Okay, let me clean the screen so you can understand what I'm talking about. Okay, so this candle attempted to break out, this green one. The red one closed in the next session, the price right below, right there. Okay, so the sellers did not allow buyers to break above and continue on. You will see in many of my lessons or when I'm doing the market recap, I would say something like this, and then the market is going to break out, is going to pull back, and if the area is strong enough, it's going to continue on. Okay, so this is how the market basically rises. It does these like peaks and valleys, okay, like this. All right, and that creates these support and resistance levels for us that we can look at for the major support and resistance areas, right? Okay, so this was unsuccessful breakout on the other side. Okay, now we have something else in mind, and something else to understand is this: we have one attempt to make a very, very high price for this Apple product, okay, or Apple company. In this case, this is a security that we are trading. Okay, so we wanted to push the price to, well, you know, as far as we can, right? But the market stopped here. The buyers, the buyers, so institutions wouldn't pay more for that product or this security more than 138.23. Okay, for the second time, market rejected this level or this price. Nobody wanted to pay that much. Okay, for the third time, we have a rejection of the same price. Okay, then the market fell, and then we climbed again, and then we have a fourth rejection of the same level, 138.23, around there. This is an area, so a few cents here and there. Basically, we have 4 points to look at this point in time. So this is 1, this was 2, this was 3, this is number 4 now. Okay, and then we have a successful breakout in the sense that price with this candle here closed on the other side and continued on. Okay, so it's not the case like this where price closed on the other side and then the next session market just closed the price below underneath that line, this resistance. Okay, so the market continue on. So we are now slowly getting this picture. This is what I explain all the time. Say market breaks above these resistance areas. Okay, we break above. Now we are expecting for the markets to come down and retest this. What does that mean? That means that market will fall because the traders will start taking profits from here. And also when the price comes down to this 138 area, like we have here, okay, they will also look to buy into this market. So they'll take this profit here, whatever created. So this profit here, this is all profit to this area here. And then the market started falling down. So traders will take this profit here and wait to see when the market falls down, okay, back to this line, what will happen at that level. Okay, will the market reject and close the price like this, okay, below? So the candle will close below a red candle. All right, so we have a close on the other side back below 138. Or is the market going to reject it and create something like this, like a pin bar? Pin bar is basically a candle that gives us an opportunity. It could be bullish or bearish. Okay, this would be a bullish one because it's above resistance. Okay, so that would be a bullish. So that means this huge wick means that price goes below this level, okay, or touches this level, and the small body on the top, all right, has to close within the previous candle. Okay, so it has to be something like this. Okay, so the body of this candle has to close within the previous candle, not previous body of the candle, previous candle. Okay, and then once the top of that candle, of this one that's giving us, which I call a signal, is broken, we have an entry into the market to go long. Okay, let me clear this again. All right, so you can understand exactly what happened on this picture. Now, situation what I'm explaining always is this. Market breaks out above this resistance. Market pulls back to retest this level to see if this level will hold and everybody's ready to pay higher price for the market. Okay, if we get a signal at that level, okay, market will continue on. All right, so that's basically how the breakouts work. Okay, so what happened at this level here? We're looking at this level here. The market broke out. Traders took the profit from here to here. That's all their profit. So from 138 to 157, that's a nice profit. Okay, and then they'll let the market run down to see what's going to happen at this area here. Okay, and boy, oh boy, what happens at that area? Well, take a look at this. This is exactly the candle we're looking at here. Okay, this is a pin bar. If everybody notices here, this green candle right here that I'm showing right here is a perfect pin bar. I'm going to enlarge the picture so you can see. So take a look. What happens at that level? All right. This candle here is a pin bar exactly at the level, basically. So 3 long wicks here, rejection of the 138, bullish candle, another bullish candle. Okay, so 2 pin bars right here. This one is a pin bar, this one is an engulfing bar. But regardless, we have a pin bar at the perfect spot. The body of the pin bar is within the previous candle. Okay, it touches the line right here on the bottom, touches this 138.23, and the market just flies off. Okay, then what we have? Well, we have, this is a weekly chart, so this is a very significant level again, 157.32. Okay, market breaks out, pulls back. We get first signal that the market is ready to continue on, which is a bullish rejecting candle here, again at 157. Okay, what we would do with this picture or this level here, we would go on a lower time frame, like a daily time frame, okay, and look for the trades there when the market reaches this level back. But if you miss this opportunity, market pushes back again, comes back again, and creates this beautiful, huge pin bar again at the same level. Rejecting, look at this wick going down below. Look at this wick going down below this 157 area. The market is rejecting this price and it's ready to push the price up, okay? Then the market doesn't go anywhere much, right? Comes back again to retest it because nobody wants to pay. They're not sure 100% if they want to pay this kind of a price, 157.32. We come back and we close the price on the other side. However, the next session, look at this beautiful candle again, rejecting the level. This is a beautiful engulfing bar. Engulfing bar means that you have a candle, previous candle, which is this red candle, and then we have a bigger candle that just basically eats this whole candle or few previous candles. Okay, the more it eats or the more engulfs the previous candles, the stronger the move. Okay, the entry is on top of this candle. The stop goes below this candle or below this support level. It used to be a resistance when the market was climbing. Now it's a support. Okay, and look at this, from I would say 62 to 174. Okay, the next session we have all this profit there. Okay, where do we expect the market to stop? Well, we only have this reference here, which is 180. around 182. Okay, so this is our next resistance. So market will continue until it reaches this next resistance, and the job of the traders at that level is to break out above that level and continue on climbing in the price. Okay, so if the market is strong enough and people are willing to pay a higher price than that, we will have this resistance here like that broken, okay, with 1 or 2 candles, okay, and then come back to retest that level. And if the market is strong enough, we will get the candle like this, or bullish candle like this, okay, or candle that's house candle. I'm going to explain that, the inside bar, and then the market will continue on. Okay, I will show you all these examples on the market, but I'm just showing the first and principle of all this breakout trading. Okay, so this was the first and the basic stuff. So this is where the market and how the market shows its hand. Okay, so if you learn something like that, you will understand everything. So we had this strong level here. We know there was a four times a rejection of this level. Okay, 4 times. Then we finally break out with this candle here. Market pushes up, creates a new high for us. Now the more significant swing is here. From here, this is our swing. Okay, this is our swing. So we are looking for the market either to break below this level and pushes the market lower, or breaks this level 157 and pushes the market higher. Okay, market comes back here to this 138 area because that was a strong level to break out. It used to be a resistance. Now the market is above, so now as the market is coming down, it's becoming a support. This candle here creates the retest of this level, creates the pin bar, and once the top of this pin bar is broken, the market pushes and continues on. Okay, we have another resistance here that was broken with this candle right there. Okay, market comes down, retest. You can see this red candle here retesting it, probably on a smaller time frame, and we have another entry into the market. Now we have a swing now from this level here, 138, all the way to 182. Okay, this is our new swing, guys. Okay, this is what we're looking at an Apple right now. Okay, that's important. So if this level gets broken, market will continue on going down to the certain level, depending. We have it marked already on the chart. We have to find these areas. Or in this case, if the market breaks above, he will pull back. He will retest this level, give us a signal. Okay, one of those candles that I showed you. And if it's strong enough, it will push to the upside again. And if the market movers are willing to pay the higher price, the market will move. Okay, so this is a first example here. This was Apple, and I hope you understood what I was trying to explain here. So now I'm going to start with another example. So pay attention, very important to understand all this stuff. Okay, so what do we have here? Well, we have a National Bank of Canada. I'm going to squeeze the picture right here. Okay, squeeze, and show you how this operates. Okay, so if we look at this picture here, okay, we can see that this peak right here, okay, this was a peak. And then the market just dumped from there, okay, just started flying towards the bottom, okay. So this was a very significant price for this National Bank of Canada, 75.02. That's what we're looking at right now, okay? Well, oh boy, what do we expect for the market to do? Well, the market will do what it does all the time and repeats itself constantly the same way, all right? So this is that peak, okay? Market tumbled down and then it started coming to the upside. Okay, we came very close here. This was price was at 73.35, so very close to 75. So I would call that a rejection of that level because the market came down, and then we came up again, and the highest price here was 74.09. So basically, So we have 1, 2 rejections with this pin bar, 3 rejections, but the most important level for us to look at is this 75.02. This is where the price stopped in the previous attempt, and that was on 18th of February of 2020. Okay, then we get this candle right here. Okay, we get this candle right here, the one that's attempting to break out on the other side. All right, so now we see that the market is coming to this 75.02. At this point of time, I will lower the chart onto the daily chart. Okay, so I'm going to go down because I can see the market is trying to go through that level. Okay, market is ready. Something's happening, and we are looking at the same picture here. Okay, 75. Remember what I was talking about? 75.02. Okay, here we go. We are at that level. This is the candle right here. This is the candle that was attempting to break, and it closed a little bit of price on the other side. All right, I will mark this candle so I can easier find it on a 4-hour chart. Okay, this is how we find and refine entries into the market. Okay, so I'm going to squeeze the price again just to find this level that we marked. And here we go. You can see this blue line. Okay. All right, we can see that. All right, and this is the example of what we are going to talk about, the first example of the breakouts. Okay, and this first example of the breakout is called housing candle, or the candle that breaks out, the inside bar breakout. Inside bar. Okay, so this is the inside bar. This is the candle that we're going to call a housing candle. Candle that actually basically will swallow the candle after. So it's not an engulfing candle. Engulfing candle will swallow candle created before that, the engulfing candle. So this would be engulfing candle. Okay, so it would eat the candle before. Okay, the inside bar candle would be on the other side. Okay, so the newly formed candle. All right, the candle that's within the previous candle. All right, so this is what we're looking at now. So this is a breakout with the inside bar. All right, so what do we have here? We have this level 75.02. Okay, we have a breakout, which is this candle right here, this green candle. You can see clearly, in order for the successful breakout, we need to have the price close. Price close. So for the bullish candle, I'm talking about buyer's candle. Okay, we have the opening of the candle, which is right here. This is open. Okay, the top of the body is the close. The top of the wick is called high, so the highest level that this candle reached, and the bottom of the candle is called low. Okay, you can also see this. Okay, so we have an opening of 97.63, so this would be an opening for bullish candle. We have a high of the candle right here, which will be 97.63. We have the low of the candle, of the same candle, right? So this low would be 97.35. And then we C stands for the close. Close would be the height of the body of that bullish candle. Okay, so this is how we read a bullish candle. Okay, this one here is a bullish candle, guys. Okay, and this is what we're looking at. This is our breakout candle. So I'm going to call it a breakout candle. All right, this is a breakout candle. After this candle, what do we expect? Well, we expect this. Okay, this is the resistance. The market was climbing. The job of the bulls or the market is to break on the other side, so do the breakout. And only if the people are willing, or institutions are willing to pay a higher price, market, when it comes down to retest this area here, or this 75.02, pardon me, okay, it will be strong enough to create the candle or a signal for us in this case to continue on. Okay, I always show this kind of a signal, but I'm teaching you now new signals. Okay, so this is signal number one, we're going to look for breakouts, which is called inside bar breakout. Okay, and this is what happens. So we have the low of the candle. Okay, this is the low. We have the high of this candle, which is right here. Okay, you can see that. So now I'm going to turn off my drawing tool just to show you when I take my cursor. Okay, so take a look at my cursor. Okay, I'm standing on top of this candle here. Okay, this candle was created on the 19th of February 2021. Okay, so take a look at the numbers here. Okay, so the high of the candle was 75.48, the low was 74.75, the open of the candle was 74.98, and the close was 75.37. We are interested in the high and the low. So high was 75.48. I'm going to move to the red candle that actually retested this 75.02 area. Okay, 75.49. Previous candle was 75.48. Okay, so we have this candle here. So 1 point higher than the previous candle. Okay, so this one does not compute as an inside bar. Okay, it is a retest. The market is moving to the upside. So we are following our signal or our strategy, waiting for the market to tell us and give us a signal to move on into the trade. Okay, so we are continue on to this candle here. Okay, so the low of this candle was 75.14, the high was 75.94. What do we get after that? Okay, so we already had a retest of this 75.02. Probably in 1 hour you would get a better signal to jump into a trade, but we're going to look for at this example because this is very interesting. Okay, so this one was not an inside bar. This was not a housing candle. Okay, so we are moving on. The next candle breaks the top of both of these candles. Okay, and creates this new candle. We have a low. We have a high. Okay, high was 75.94. Now we have another candle right after that created. Okay, and in this case we get a bullish candle, which is housed, or it's an inside bar of this candle here. Okay, so the high of this candle, a housing candle, was 75.94. The next candle that's finished in creating was 75.89. So it's lower. The height of this candle is lower than this one here. So now we do have an inside bar. Okay, this was not an inside bar. This one is. Okay, so how do we trade this? So the height of this candle is like this. The low of this candle is like this. So this green candle here is within the previous candle. So this is a typical example of the inside bar breakout. Okay, this would be a way better example, but this height of this candle is higher than this one. So the market was traveling higher than previous breakout. So we are waiting for the signal, and this is the signal that we receive. Okay, this is the signal. Okay, even though it doesn't look the way exactly how I showed you here, in the real life, candles will be a little bit different. Okay, but as long as this is this kind of a pattern, we have a housing candles where the low and the high of the candle are housing a candle after. Okay, the entry into this market is a breakout of the top of the candle here. Okay, so of the housing candle, and sellout would be a break of the bottom of the candle. Okay, so inside bar means one thing. It's an indecision, guys. It is an indecision. The market is thinking where it needs to go. When we get the signal that breaks above this area or this housing candle, we have a clear signal that the market is telling us that the market is ready to move on and the buying starts. Okay, once this top of the candle was broken with this red candle. This red candle broke actually the top of this candle. We were in a long. So long means that we are buying into the market, okay? So long, it means buying, okay? All right, and short means selling, okay? So those are the terms you can learn now from this on. So let me show you. I'm gonna measure these candles with my cursor. So the high here was 75.94. The next candle was 75.89, and the next candle is 76.02. Red candle with 76.02 broke our high of 75.94 by more than 12 cents, and we were in the trade. We were in the trade after that, okay? If you were still not sure what's going on, what we get here is basically the height of this candle here, okay? And I'm gonna use this line here, so show you more precisely. This is the height of the candle here, okay? So this candle's here. The height of the candle was a kind of a resistance because that was the highest point where the market moved, okay? You can see the red candle here that broke. You can see the wick. Let me just extend this so you can see it. Very nice and clean example. You can see the wick right here that broke above, okay? Everybody can see the wick, okay? Right here of this red candle. This was our entry candle. And if you're still not sure what's going on, the market breaks above this 75.94, creates this beautiful engulfing candle. This is engulfing and pin golfing. Pin golfing means that candle is huge like this, okay? It has a shorter wick on top, long wick on the bottom, okay? And it's rejecting the level, okay? So basically, sellers tried to push the price back down below this level here. There is this black line that I marked here, which was the highest after the breakout, okay? Sellers tried to push the price back down to the 75.02. They were not successful. Buyers with this long wick that explains to us that buyers pushed the price back above this line. So this is the strength of the sellers, this wick. There's no body, so basically there's no power to the sellers. And the body was created above this line, okay, with a huge wick. Wick usually basically means that rejection. So take a look at this candle. Take a look at the power of this candle, okay? And then after that, we have, first of all, this candle is also engulfing. It's engulfing this one and this one. So this is engulfed. This is engulfed. If I pull the line right here, you can see that all these candles are engulfed with that candle, with this pattern. And if you missed this move with this red candle here, your entry would be on top of this candle. Your stop would go below this candle or below the support line, and the market will move on. And this is how it's done with the housing candle, or this is the inside bar breakout. Okay, this example, of course, gives us a few more details. I'm reading each one of these candles for you. This is why I say the candles always tell the story, and the story is such an interesting thing to interpret. This is such an interesting way of interpreting things. Okay, also, one more thing. I want to show you something very, very interesting if you are never been into this kind of a trading. I'm going to show you what happens if I pull the Fibonacci on the length of this candle here, okay? And where the market bounced, okay? So take a look at this. All right. Actually, okay, not like this, sorry. So I'm gonna mark it like this from here to the height of the candle, just the height of the candle here. I'm trying to show you the numbers here so you can see the measurement. Okay, so take a look. I always talk to you about trading with a Fibonacci. Fibonacci is the retracement levels that are calculated mathematically by famous mathematician Fibonacci. Okay, and then these are Fibonacci, important Fibonacci numbers. Okay, so, and these are the retracement levels. Okay, so the important ones are 38 level, 50% level, and 61.8% levels. Okay, let's take a look where the market bounced. It bounced at 61.8. Look where the price stopped, and if you missed all this, with this resistance now turning support because the market is trying to retest it again, and this 50% and 61% bounce of the Fibonacci, you have a beautiful entry right here into the market if you missed all these moves. Okay, and the market just moves on from there. Okay, so this is how you can use the Fibonacci in trading. Okay, these numbers repeat themselves over and over again. Traders always look at these kind of numbers. Most important numbers are these four. Okay, so what we call these numbers here are also the speed of the market, how the market is going to react in as far as the moving on. Okay, so if it bounces at 38%, it's the fastest that it's going to break out and continue on. If it's 50%, then it's going to be a bit slower. 61%, a bit slower, and then the slowest would be 78%. So these are the levels that we're looking. Also, we have extensions, but I'm going to talk about that in the next session probably. Okay, so I'm not going to go too much into Fibonacci here. Just wanted to show you that these kind of stuff is tradable and how to interpret. Okay, so this was the example of the inside bar breakout. Okay, continue on. Okay, so the next example is again National Bank. All right, we have a level that it's been marked on a weekly chart, and that level was 91.70. Okay, and this is where the market came, of course, when we had that kind of a, so we had a significant level that was created here, then the market pulled back, and then when it started climbing as it is right now, again it came to that same point, which is this high right there, rejected it again and started moving again. Okay, so we come to this level here, we can see that it's clearly this candle here, the wick of this candle is trying to break on the other side. Okay, this is going to be called a breakout with the engulfing bar. Okay, breakout with engulfing bar. All right, or a breakout with engulfing candle. All right, engulfing candle, once again to remind you, engulfing candle can look like this, which engulfs the previous candle. Okay, even though if the bottoms are exactly the same, it's still engulfing candle eats up the previous candle here. Okay, and this is exactly what we have here. So we have an attempt here, nothing happens. We have a doji, indecision. Doji is basically a balance of power. We have something like this where buyers cannot push the price up, the sellers cannot push the price up. So this is the body, basically, this just this line, right? So it's balanced power, and this is where we have this candle here. The next candle tried to push price backwards, and then we get this candle here. This candle here eats up the candle previously. This is an engulfing bar with the breakout. With this kind of a breakout, we don't wait for the signal, or we don't wait for the market to come down, pardon me, and to retest the level. With that kind of a breakout, we take the trade exactly on top of the candle. Once the top of the candle is broken, okay, we can take the trade knowing that market is going to continue on in the right direction. It's going to continue in the bullish direction because this is a strong signal for us to move on into the market. Let me clear this and show you a bit better how it looks like. Okay, so let's take a look. Let's take a measurement to my cursor here, and I'm going to measure here. So the low of this red candle here was at 91.52. The high was 91.78. Okay, so 91.52 was the low. Low of the next candle is 91.50. So it's lower than this red candle. Okay, so it's lower, and high is 92.28. So definitely we can see the difference here. I'm going to try to expand it like this so you can see it, and I'm going to put the line right here like this so you can see that it's an engulfing candle, okay? That it fully engulfs this candle here and this candle here, okay? Once we get the signal like that, this is a perfect example of the breakout with the bullish engulfing candle, okay? So what we were looking here is a significant level of 91.70 where the market stopped here. You can see clearly the market stopped here. This level was marked on a daily or weekly chart. I can't remember now exactly. It doesn't really matter. We're just going over the examples of how to trade these kind of breakouts and how to spot these kind of lines and pardon me, this kind of breakouts. So this example is we have a resistance, we have a breakout with the bar that engulfed two previous bars here, okay? Once the top of this breakout bullish candle was broken, we have a buy situation, or if it's broken on the other side, basically you would have a sell situation, but we are looking into buying and making profit, not selling, okay? There's possibility to buy and sell in the different markets. You can also do the same stuff. You can short it in a stock market, but I'm going to go over that in a different video. So what we have here, we have one candle, which was indecision here. We noticed that this candle was trying to break out, was not able to. We have this just a little wick that's hanging just above this 91.70. Again, we had this indecision right at that level here. You can see the body did not close on the other side. Then we have an opening of this red candle above and then closing below. And then we have a full-on breakout with the bullish candle, breakout. We can see the bottom of this candle and the top of this candle is basically completely eaten these two candles or engulfed these two candles. And that's your pure signal that the market is super strong and the buyers are super ready to pay a higher price and move the market into positive side. And take a look what happens right there. Like we have a huge move right away, you know, green candle after green candle, okay? And then just moves on from there, okay? So this was the example of the breakout with a bullish engulfing candle. All right, so now you know how to do that. We're going to move to the Bank of Nova Scotia, okay? All right, so on the Bank of Nova Scotia, I highlighted these two areas right here. So basically what this little thing represents is this, okay? So take a look at the peak right here. Let me take my tool. Take a look at the peak right here. Take a look at the peak right here. Okay, so these two peaks are not the same. They're not exactly the same. Okay, this is why I always talk about the area of the trading area. Okay, so what I did here is basically I did this. All right, I'm just gonna clean this. I took this little rectangle, okay, and marked the top of this candle and marked the top of the other one and created this kind of a shady area that basically shows me, you can see here, the top of this candle and this candle here. This gray area basically is the area. It's not one perfect line, which is 66.59, but the most important area for us is this gray area, okay? So these tops, right? So we can see that the market was there and clearly rejecting this area, okay? So what happened basically there? All right, I'm going to move the market, pardon me, picture of the markets a little bit right this, okay? So you can see it clearly. All right, take my tool and move on. This is going to be a perfect breakout that I show all the time. So once again, we are talking about this, okay? So the market moves to the upside, breaks this level here. In this case, this is a little area, okay? So this is the area that we are trying to break out. Market broke above with this green candle right here, clearly closing the price on the other side. So the market broke out. This is why when I show on my examples, this is how I always talk about. So market moves to the upside, breaks this level, this significant area, this bullseye area, okay, this resistance now is broken. Now as the market is falling down, okay, we are going to retest this area and this support now, because when you move in to the upside, that's a ceiling or resistance. When you're going towards the bottom, that's support or the floor, whatever you want to call it. It doesn't really matter as long as you understand what I'm talking about, right? So resistance turns to support once the market is broken on the other side. Market is coming down to retest it. What we are waiting for now to see that the market is strong enough to show us in this gray area that it has a power to reject it and give us a signal to move into this trade. And oh boy, what happens here, okay? We get this perfect, picture perfect pin bar at that area after the breakout, okay? Take a look at that. This candle breaks out, it creates the high, market comes down. Look at this huge wick right there, okay? So the sellers were trying to break and close the price below the 66.59 area. They were not able to do it, okay? The bulls pushed the price upwards and all the way above, and this is example, all the way above, this is just a perfect example, above this gray area, right? You know, what we are concerned mostly like is this red line, but it doesn't really matter since it's an area. We have this body also above this gray area that I marked, okay? This is a picture perfect pin bar. This is the pin bar. This is a doji pin bar, okay? So that, which means that body of the candle is basically telling us that the sellers have no more power at all and the bulls are fully in control of the market. And take a look what happened. Once the top of that candle is broken, so the top of this pin bar is broken, market just moves on right away, okay? So this was a clear signal, or this was a clear example of the candle breaking out of the area that we have marked, 66.59, okay? With the pullback and the signal that I always show you on the charts when I'm doing the market recap, okay? So this is how the market actually works. Breaks out, area of resistance, comes back, retest this level, and if it gives us a signal, okay, a strong signal like this, market moves on. And this is another example of a breakout with the pullback, okay, with a clear pin bar signal to go long, okay? So this is going to be the end of part 1. I'm going to make a part 2 so that video doesn't go that long. It's already about 50 minutes. So stick around with the part 2. It's coming today as well. I'm just going to have 2 parts here. So stick around and we'll continue on from there.